The biggest challenge is how to get people together into groups that are not adversely selected so that you have a distribution mechanism and a reliable mechanism of premium collection without having just a small group of sick people, essentially. Once you allow adverse selection to enter into groups, you end up with a logarithmically higher expenditure on claims, so it just runs out of control very quickly. So the biggest problem is how to avoid adverse selection by getting non-adversely selected groups. The second problem is how to distribute and market and convince people to part with their money. And the third problem is how to just handle that premium collection. You should only work with pre-existent groups in our experience, and that group can be anything. It can be a burial society, it can be a microfinance group that's practicing village banking type methodology where you've got 30 plus ladies in a group. It can be any sort of community organization, or it can be an employee group. But it needs to be a pre-existent group, not just people who have come together for the purpose of accessing insurance. And as a general rule, the larger the group number, the better it works. Once you start getting group sizes of less than 50 people, it does not work very well in terms of employees. Once you start working with groups of less than 20 families, if you're talking about microfinance groups, so let's multiply that up to say 100 lives. Once you drop below 25 families, you start getting a lot of adverse selection. Once you drop down to 10 or 5 families, it just goes way out of control. In terms of consumer education, marketing, or indeed distribution, you need to get, if you're dealing with community organizations, you need to get the key members, the opinion leaders in that organization on board, first of all. If they do not understand what you're selling, if they do not buy into the concept, then they're not going to be in a position to sell the idea to the other members of the group. So having got those key players on board, and there's a whole art in how you identify who in a group are the real key players. It may be the chairperson, or it may be someone else who doesn't hold office but is an opinion leader. It's only when they buy in with a microfinance or a community group that you can move ahead. But the most critical issue looking back for us is that if you have been successful with some groups, then it's very easy for them to enroll neighbouring groups. For example, in the microfinance groups in Kampala, we're now finding that some of the members themselves want to become marketeers and go and sell our product to neighbouring groups. So it's only by building credibility that you can actually start that chain reaction. And one of the other lessons to learn, certainly dealing in the environment that we have in Uganda, is that this takes time. If you try and approach organizations on the standard 24-month or 36-month project cycle, you are going to push too hard, and the backlash of that pushing totally undermines your long-term sustainability. It's almost as if you have to pretend you're not really interested, and in one sense, because our organization also has a strong commercial line, we're not totally dependent on our community work for our existence. We can afford to take time, and we are not at this stage a donor-dependent organization, so we set our own timelines and our own agendas, and that actually gives you a much higher rate of success. Our work up country with traditional burial societies was that getting in the first 10,000 people was extremely difficult. Getting in the next 20 became easier, and now as we go from 20 to nearly 30,000, it's natural. We don't go doing any marketing drives. It's just a spontaneous process in the sense that neighbours see what is happening, they see it's successful, and then they want to buy in themselves. But that initial period, if you try to force it, and if, as I've seen with other organisations when we previously did community health financing, if you start offering incentives to key players in order to get them on your side, you end up hostage to a small group of people, and that doesn't work. You just end up backing yourself into a corner. And in our experience, quite often this resulted because of well-meaning but misguided donor efforts to try and deliver things on time, and that timelining is counterproductive if you're dealing particularly with rural communities, because if they want to buy in, you have to let them go through a natural process of kicking the idea around within the group, and the harder you push, the more likely they are to push back in the other direction. How you define cross-subsidizing really depends on your business model. We are not attempting to recover our management costs at this point in time from the bottom end of the market. We do aim to break even. Sometimes we do, sometimes we don't. But in the volume of our commercial business, what we win or lose in the informal sector at this stage, it does not make a large material difference, because even though they account for 30% of our clientele, they account for less than 5% of our turnover. That gives us a little bit of flexibility. In the long term, we would like to be at a position where you are recovering your full claims expenses and have an additional 15 to 20% for admin, and that is possible. But it's also a function of numbers. The bigger the numbers, the better it works. And the other thing that we have discovered is that there is very limited elasticity in terms of affordability within these clients. So you have to look not at how to get more money, but how to use the money you get better. And that relates in our experience to targeting two issues. The first issue is preventable disease. The way we've been able to get up close to full cost recovery with the rural communities is by putting a lot of effort into prevention. We engaged in distribution of subsidized mosquito nets, where they still made a certain contribution, so they valued what they were getting, but those insecticide impregnated mosquito nets have brought down the incidence of malaria substantially. That has in turn reduced our claims cost. We've moved on from looking at malaria to now looking at waterborne diseases. We're distributing special jerry cans with water purification tablets. Again, we'll wait and see at the impact on that, but our impression is that that again will reduce cost. So aside from prevention, the second thing you have to look at is in Africa, the pharmaceutical costs. The pharmaceutical costs in Uganda are an awful lot higher than they would be in, say, India or Pakistan, where we also have experience working and consulting on other roles. And that is a massive difference. What we would pay for a pharmaceutical compound, even a generic, in Uganda could be 3 times what is paid for the same product in India. And it's only through compressing those costs that we can bring in profit. We don't think we can make profit by squeezing our clients beyond a certain point, because their incomes are not increasing. Their level of discretionary disposable income is limited, and their prioritization of health inevitably comes below food, housing and education for their children. So we recognize that you're somewhere number 4 or 5 or 6 on the pecking order in terms of where disposable income can go. So we're not trying to crank up the premiums beyond a certain point. What we're trying to do is achieve economy of scale, and then start looking at the supply chain that feeds into what we're doing, and how can we, in cooperation with our medical suppliers, in cooperation with the large pharmaceutical importers, even in discussions with some of the international pharmaceutical manufacturers, is there a way that we can compress our costs so that A, we make a profit and therefore are sustainable, and B, we can keep our premiums at a level that's affordable for communities who are living in fairly marginal conditions in terms of their disposable income capacity. The first trick in premium collection is selection of your group. For example, if you're working with microfinance organizations, if you have a village group who have a bad record of paying back their loans and are always having political arguments and arresting their treasurer or secretary, then don't go to that group to try and do microinsurance. If they're a bad microfinance group, they will be a bad microinsurance group. So be unashamedly selective. Pick the people that you know you're going to succeed with, at least when you start. Pick the good groups who are performing well, who've got mature leadership, who have a history of handling money honestly and reliably, and then work with them. The second trick, if you like, that we had we've a certain number of basic principles we developed from the very beginning, partly on instinct, and one was my staff never handle cash. They never ever handle premiums. Premiums are, in the case of a microfinance group, paid directly through the MFI. Some of these MFIs, like for example Finca, will give a loan to the group or to the members to pay their premium and get it back. Whatever way it works, we get a check from the MFI, or if the group is not paying through the MFI, they go directly to our bank account and we get a bank deposit slip. We just don't handle cash. The cost of handling cash in terms of security, in terms of compromising integrity, in terms of the personal safety perhaps of your own staff, it's not worth the risk. So in terms of collection, A, pick groups that you could rely on, B, avoid cash at all cost. See microfinance organizations specialize in collecting nickels and dimes and turning them into dollars. Use them. Do not get involved in the collection chain yourself. Life is too short, and there are other people who are much better at that than you are going to be. So let the specialists do what they're good at, collecting up the money, pass it on to you. You as an insurer want to get your year's premium up front in advance. You don't want to be playing around, in our experience, with premium financing. If someone wants premium financing, let a bank or microfinance organization do that. Don't go there, because you will end up in problems, and if you're a regulated insurer, you will probably break the rules.